Hello, everyone. This is Fernando with Texas United Realty and United Real Estate. Thank you for joining my webinar. Today, we're going to be talking about seller financing, but just a couple little helpful tips. One is ensuring that you guys at least get a email from the brokerage at least once per week. If not, there's probably some kind of problem with the spam or also the Gmail. We're having issues with that. So you can always contact our office to get that resolved. Also, ensuring that you guys are joining our Facebook private group. There's the QR code that you can join. And also just a reminder of our conference in September at Walt Disney World. There are some plans that you can do, which you can contact our office, but like the registration, you can split it into two payments through your DA. And there's other different types of installment plans that you can contact about in order to join this conference. Okay, so how to search for seller financing within Matrix for listings. And then what forms do we use? And then I'm going to talk about other things too. So what is seller financing? We also call this one owner financing as well. It's the same thing. The seller is providing financing to the buyer to purchase the property. And this is instead of the buyer using a traditional lender like a bank or lender, the seller becomes the bank. The title company will also put the seller's name as the lien holder when registering with the county after closing. As far as advantages of using seller financing, there's less closing costs, quicker closing time, opportunity for buyers who do not have great credit or low income for buyers. Also, there's no private mortgage insurance required by lenders and banks. Some disadvantages is there, of course, the owner can charge pretty good higher interest rates. I've seen 6%, 7%, 8%, 9%, 10%. There's bigger down payment requirements that the seller will require. There's no appraisals, so maybe you might be paying too much for the properties since you don't know what the property value is. And usually seller will not negotiate any terms as well, since you're asking them to be the owner financing. So let's do a quick demo. And first, if you want to locate through Matrix the sellers that are offering owner financing, you can go into Matrix and then select search. Single family, quick single family, and then select active. And then one thing that you need to do, since there's no filters for owner financing, you're going to have to add it to this criteria screen. And the way to do that is down here at the bottom. You'll see the word add additional fields. You can click on that, and then you can type in financing. And then it'll say financing considered, and that's a filter that you're going to add to your criteria screen. So you can click that and say add. Now it says financing considered, and then you hit the back button here, and now here you have a new field called financing considered, and you can select the one that says owner financing. Once you do that, you'll notice that the result, you see 535 matches. So what it's doing here is Matrix has found all the listings that are offering owner financing. So there's quite a bit of them. You can always do a map and search where they're located if you're targeting a specific area. So this is real helpful when you're helping people with or buyers that are looking for owner financing. You can always set up a auto save search, or you can use the polygons and draw and just target that particular area. And then this is the area if they want to look at owner financing here. And then you click on the results, and then you can look at the properties and see if you like them. But what it's doing actually is doing the search where the owner is considering owner financing, and that's where it's grabbing it from. Okay, so some of the forms. So here I just have a demo here of land that's being offered owner financing, and the way it usually looks, and this is similar to the 1-to-4 contract as well. The only thing really different, there's not, the contracts are the same. The only thing that's different is paragraph 3. And in paragraph 3, it still requires a down payment. Typically, the owners always want 20 or 30% of what I've seen. But the one thing is that's different is instead of you selecting the third-party financing addendum, you actually select the seller financing addendum. And that's where this tells everyone that it's owner financing. Again, you still put, what the principal amount is of what's agreed upon between the buyers and the sellers, and then what the total price is. So that's the only big difference when you're dealing with owner financing as far as on the contract itself. The other thing that you're going to have to select is instead of selecting the third-party financing addendum, you're going to select the seller financing addendum. So that's the other difference. That's pretty much it. Okay, everything else is the same, remains the same. Now, one thing that you have to do, since you're adding this seller financing addendum, is you're going to have to pull up the seller financing addendum and fill it out. This is a 2-pager. And it kind of looks sort of like you're writing a promissory note. But what's going to happen is when you do the seller financing addendum, you're going to plug in some terms and conditions, and the title company is going to use this seller financing addendum to generate a promissory note. And that's what's going to happen. You're going to fill out the details here, but the title company is actually going to grab this information and generate a promissory note. And they usually have on staff a lawyer, an attorney, who writes it up, the promissory note, by using the seller financing addendum. And there's typically a charge for about usually is about $600. And the way that works is it's an additional closing cost of $600 typically, or it might be more, but I've heard 600, and the buyer and the seller can split, into 3 and 3. I've seen the seller say, no, I want the buyer to pay for this promissory note, but anyway, it's negotiable. So the breakdown of this seller financing addendum is paragraph A has to do with credit documentation. This is typically what does the seller want in order of credit worthiness from the buyer, and they have things like how many days they want it to be delivered, and after the effective date, and what type of information are they looking for. Credit reports, verification of employment. Again, this is something that comes directly from the seller. Okay. The seller may just want only current financial statements, bank statements or such. Or the seller may say, no, I don't want anything. I don't need anything. So it all depends on what the seller's looking for. And then there's other information regarding buyer's credit approval. But here's the promissory note I was just mentioning earlier. The promissory note here is going to state what the balance is, which is the $40,000. That comes from this contract here, where I wrote here $40,000. So that's the principal. And they here they're referencing 3B. And then what type of annual percentage? Of course, this is a pretty low 5%, but typically I see 6, 7, 8, 9. I've seen up to 12. So that's part of the promissory note content. And then they have a choice of which one to select regarding the installment payments. Typically, the one that I always see is the one in the middle. In monthly installments of $600. This includes the interest. And this information usually comes from the seller. They tend to do an amortization table, and that's where they get this information. But the buyers can also do it too. Or the agents can do an amortization table. I know I got Tiffany Black on the line. She could probably talk about what the amortization table is. And then here it says, when does it start? You know, and typically it starts 30 days after closing is the typical date that we put. And then how many months is the term of this note? You know, is it 24 months, 36 months? Now, typically, seller financing, I don't see it very long. You know, I see maybe 2 or 3 years. But anyway, these are the different things here. The other part is property transfers of the deed of trust. You know, here it says the seller consent not required. Property may be sold, conveyed, or leased without any consent of the seller. This means that the owner or the buyer that's buying this property under this promissory note, that he doesn't have to have permission to do whatever he feels like doing in that property. Then you have the other one that says consent required. So this one says, you know, you need permission from the seller. If the seller finds out that you're doing something like leasing it or other things, it says here, seller may declare the balance of the note to be immediately due and payable as punishment. So that way, that's for that. Then they have a message here under A and B. Buyer's liability to pay the note will continue unless buyer contains release of liability from the seller. So whenever the promissory note is paid in full, then the buyer needs to request from the seller to release liability, meaning that, hey, there's no more liens against my property that you have. There's also casualty insurance that can be bought or not bought. This is just more kind of like driving a car. It's just additional insurance that's there. And it has to do with seller as the mortgagee, loss payee effective on the date of closing. So it has to do with the closings. Tax and insurance, either you have escrow or you don't have escrow. Typically, I always see escrow not required because typically buyers want to handle their own paying their property taxes. And, you know, they have to send a report to the seller saying that they did pay as proof that they did pay taxes. Here's the evidence that all ad valorem taxes on the property have been paid. So that does get sent from the buyer to the seller. Then you also have escrow required. So here the seller's requiring that there be an escrow, and then you have to set up the account. Usually, typically the seller will have a third-party servicer to provide that. And who's going to pay for that service? You know, is it the buyers, is it the seller? It can be paid by both if they want. Okay. And then it's signed by buyer and seller. Keep in mind the seller addendum, the seller financing addendum is used by the title company to generate the promissory note. Okay. So that's what this is for. Okay. So some tips: the seller cannot provide seller financing, also called owner financing, if the seller still owes a mortgage. So in other words, the requirement is that if the seller still owes a mortgage, he cannot provide seller financing. It must be, the house must be owned free and clear. Okay. If you do hear something, they usually call it a wraparound. That's the phrase that they tend to use when there's a note wrapped around another note. The title company will have additional fees to process and generate the promissory note. Like I mentioned earlier, they typically, I see them charge $600. And again, it could be split between the seller and the buyer, or it could be a buyer pay only per the seller. Seller financing usually has very high interest rates. high down payments and short terms. They're short terms rather than long terms. In other words, you won't see a 30-year owner financing. The max I've seen probably is 20 years. So, and that's my presentation. Does anybody have any questions? I know Tiffany, I think you came in a little late. I don't know if you know what you caught.
Yes, I came in right at the seller financing addendum.
Yeah. One thing is just what is seller financing? What are the benefits, advantages, and disadvantages of seller financing? I've done quite a bit in my background, my history. I tend to see them from investors. Like I work with a couple of 5 investors, and 2 of them like to do seller financing or look. They ask me to find properties that are seller financing. They prefer that method, even though they have a lot of money, and they have a lot. One of them even owns 2 gas stations, but his mode of operation is to always do owner financing. That's what he prefers.
Okay. But sometimes with those, do they always, sometimes they don't use realtors for that, right?
Well, yes, and that would be really anything. I've seen FSBOs for sale by owners,
Okay.
do seller financing. Yeah, but seller financing is not really that they don't use realtors. I've seen it more, in my experience, I've seen it where the buyers they don't have any good credit, and they've been not qualified by any, they can't be qualified by any lender, and they're in desperate mode. And that's why I tend to see more buyers asking realtors to please help them locate properties that are owner financing.
Okay.
Yeah. And I don't know if you saw how I did the search for owner financing. Are you familiar with that?
Mm-hmm.
Okay, great. Yeah. So all you have to do is just add a column here and then just do owner financing.
You know what else they moved? Remember when we used to be able to go there and do the foreclosure? They used to give us a foreclosure. Foreclosures are now in a disclosure
right
area.
Yeah, you can find them here.
Mm-hmm.
And I usually select real estate owned.
Mm-hmm.
I usually select short sell. So I select usually 3 at least. But
Okay.
yeah, correct. And as you can see, I selected these, and I found 10 of them.
Right.
Yeah, 10 that are owner finance and they're foreclosure or distressed properties. So let's see, this one, it says owner agent, real estate owned. Okay, so this one looks like it's a corporate listing, and they're also accepting owner financing, which is pretty interesting.
Right.
Of course, the price is $714. It's not cheap, but that's a good one. Any other questions that someone may have regarding owner financing? All right, great. And hey, Tiffany, have you done a couple of owner financing?
I haven't did any owner finances yet. Nope, I haven't.
Okay.
But I'm starting to work with more investors though, so maybe
yeah,
that will be a thing.
The only typical thing that with seller financing is just doing this field right here.
Okay.
Rather than this one.
Okay.
And then selecting this instead of the other one.
Okay, then the third party. Okay.
Yeah, that's really about it. That's the only difference.
Okay.
Everything else remains the same. And then the seller financing addendum is what you have to add. This form is required.
Okay.
Yeah. And
but you
again,
said I have to go through the title company too as well.
Yeah.
For
So
them
what's
to,
going to happen is, you're going to get the terms and conditions from the seller. And then when it gets placed with the title company, then the title company is going to use this data to generate the promissory note.
Okay.
And the promissory note usually costs around $600.
Okay.
And usually sellers want the buyers to pay the $600 because they're the ones requesting the owner financing.
Right, exactly. Okay.
Right. But sometimes they can do it, like if, that's where realtors get involved and we negotiate. And we can do 300, or so on and so forth. But yeah, that cost can be, and it's best to contact the title company saying that you are submitting a seller financing and you want to know what the cost is.
So ask up front. Okay.
Yeah, yeah, so that would be real helpful.
Okay.
And the title companies that you normally use anyway, you can always just say, hey, if I ever do a seller financing, what's your typical charge? And then that way you already have it in your mind, with the title companies that you normally use.
Okay.
Mhm, mhm. Good.
Thank you, Fernando.
Yeah, so if you ever have questions regarding, so I've done several of these, so I'm
Okay.
familiar with them. Just let me know.
Okay. I appreciate that.
Sure. Any other questions like that we can go shot? Okay, well, thank you, everybody, for joining. Appreciate
Thank you, Fernando.
Thank you.
Thank
Carrie.
you.
Bye.
Hey, Carrie.
Hello.
All right. Bye.
Bye. Good night.